Welcome to Compound Insights, a podcast by CFA Society New York. I'm your host, Rob Rowan. Today we're talking about the legal cannabis market and some exceptionally interesting things that are developing in it right now. It may be a little bit too hot of water for some, but I think some other people are going to be very interested when they hear about the yield. So we are here with Jordan Youkilis. Jordan is founding partner of Key Investment Partners, where he is responsible for developing due diligence strategy, and we're going to dig into that a lot, and leading their co-investment syndication process. And he also has a role in sourcing some of the deals for the organization. Previously, he was with Partners Group private equity team, and he was at GE Capital. Jordan was a Wells Scholar at Indiana University, where he earned a degree in economic and political science. So, Jordan, welcome to CFA New York.
Thanks so much, Rob. Really honored to be here.
So I did want to start with a sort of New York question, which is, I know there's some legislation that might drop soon, and we are here recording this on February 1st, so it might by the time you listen to this podcast. But Jordan, tell us about it.
Yeah, absolutely. So, everyone in the cannabis industry is very anxiously awaiting the DEA's decision as to whether or not they will confirm the HHS's recommendation to reschedule cannabis.
Right.
And so that would really be the most significant change at the federal level since cannabis was made illegal back in 1970. And we can talk about, what some of those implications are for rescheduling, but that's, if folks follow the Publix closely, that's why we've seen a lot of buying activity. And I think a lot of insiders are cautiously optimistic that 2024 has the potential to be a gangbusters year because of that.
Right, but that's real hard to see, right? Because it's a federal issue that has a massive amount of opaqueness.
Yeah, it's true. But, we've seen a lot of the signals going in the right direction, right? So at the end of 2022, President Biden sent out a text about, moving the process forward for rescheduling, for pardoning folks with cannabis offenses, et cetera. And then a number of governors have kind of followed along in that guidance. So you're right. I mean, I think we've all come to recognize not just cannabis, but the federal government more broadly has become more and more opaque, more difficult to predict in recent years. So, like I said, we're cautiously optimistic. Don't want to count our chickens before they hatch. But nonetheless, all of the signals that we've been seeing from the government seem to indicate that it's going to be a positive change for us.
Okay. And what's pending here for New York?
Yeah. So New York is one of the funny cases of cannabis, right? Where I believe it was the end of 2021, New York officially legalized adult use cannabis. It was going to be a huge market. And then it's a situation where it's hurry up and wait, right? And that's one of the things that you see with a lot of states when they make that transition from medical to rec. Some get it up and running in, less than 6 months, and it's great. Other regulators just drag their feet or try to please everybody, and it ends up taking much longer than anticipated, and that's been the case in New York.
I guess there's also not that much of a track record here when you think back to California and Colorado, who had implementations like the former of the one you just said. Mm-hmm. And I guess one of the other things that makes it more difficult for people who work in the government or elected people in the government is none of the tax receipts really turned out the way they forecasted them back then.
Sure. Yeah, no, you're absolutely right. And one of the things that has been tricky in New York in particular, right, is you've seen this kind of regulatory gray zone over the last couple of years before adult use sales have really started to ramp up, is that a lot of illicit sellers have kind of flooded the market, in particular in New York City. I'm sure folks in the city see this all the time, where seems like every single corner store is now selling product. All of that is illegal. Right. But because folks, think New York is legal and the law enforcement hasn't really been cracking down on it, it's kind of created this wrinkle in the market that the black market has filled.
Right. It's also a little bit, I assume one of the things that has kind of greased the wheels in that change is the fact that there are still so many vacancies on the ground floor that the owners of the building will take anybody.
Yeah.
Yeah. That's the other problem. So.
No, I think you're right. I think the kind of just craziness of the pandemic and all of that has contributed to the black market's success in the last couple of years, because there's just been a lot of confusion, a lot of change, and frankly, a lot of regulators and law enforcement officials have had to focus their priorities on other things.
Right.
But Governor Hochul, just yesterday, I believe it was, maybe 2 days ago, came out and said, guys, this rollout has been a disaster. We've got to rein it in. We've got to clean up this illicit product. So I do think it's going to happen. It's just going to take some time to sort out.
Okay, so let's skip over to the investing part of this, which I think is very interesting, but you got to start with the regulatory environment because of many people who are listening to this podcast have a fiduciary obligation, and it's hard to do that without understanding the regulatory stuff. But let's go over to debt investments for a
Yeah.
second, because I know you have a lot of traditional training, which is what we need here. How do you anticipate debt investments will perform over time in this sector?
Yeah, it's a great question. We historically have been equity focused in cannabis. We've made 16 equity investments to date, although one of the things that we've seen over the last 2 years as the public markets have totally cratered, and happy to give some more context as to why that's happened, really capital markets have dried up for cannabis across both equity and debt.
Mm-hmm.
So one of the things that we love about deploying in this current environment is that we're able to get the best of both types of securities.
Exactly. Yeah.
Mm-hmm. Now, for specific debt instruments, we've actually been spending a lot of time on this sector as well, because we think a lot of the public cannabis companies have very attractive yielding debt currently.
Right.
So I think that debt in particular offers a really nice return for investors. And one of the bigger criticisms for cannabis equity investments is that because federal regulatory change has taken longer than most expected, we haven't seen the influx of exits on the equity side. So a lot of folks are kind of in these positions that they haven't been able to exit, which is, I think, another reason that folks are maybe shifting a little bit more towards debt these days.
Yeah, so let's talk a little bit about the yield, because everyone's very excited about a 5% yield on risk-free investments on govies. So what yield are we talking about here?
Yeah, so for new issuances, you're typically seeing, realistically, even for top credits, call it 13 to 16%.
Yeah.
And as we're thinking about our debt strategy, we're looking to buy them on the secondary markets where you can get a nice discount. So, call it close to 20% all-in yields on some of the debt securities right now. It's pretty juicy.
How do you access the secondary market for this? Is it formal, or is it people or?
It's a little bit of both. Yeah, there are some banks that broker deals in this, but it's a lot of building out a network. That's one of the benefits for us having been in the sector for 5 years now. We know all the family offices, institutions, cannabis dedicated funds that have a lot of these positions. And so that's where we're sourcing a lot of our deal flow.
Well, okay. So, and this is a very much crystal ball question, so forgive me for this, but when you talk about the yield, can we also define the time frame?
Yeah.
Because that's the other, I used to be a bond rating analyst, over what time?
Yeah, no, totally. So that's, call it 18 to 36 months.
Oh, okay. So that quickly. Okay.
Yeah.
That is remarkable.
Mm-hmm.
So I guess this is the other reason that I was keenly interested in having you on the podcast, is you have a substantial amount of experience in LBO.
Mm-hmm.
And many of those traditional tools are likely to become really valuable to you as there is some kind of consolidation in the industry here. So talk a little bit about your LBO experience and what you think is going to be valuable in the next step of this industry.
Yeah, absolutely. So as you mentioned, started my career after GE Capital working with Partners Group, initially here in New York in the Grace Building, then moved to San Francisco, ultimately moved to Denver in 2016. And so, like most institutions, couldn't invest in anything cannabis related because of the federal illegality.
Right.
But my eventual partners and I all met at that firm, living in Denver, the first state to legalize adult use, naturally saw the massive growth of the industry. So anyway, that's what, led us to breaking off and starting Key. And so I think you're absolutely spot on, right? We see so many opportunities for consolidation in the industry, a lot of smaller operators that have not been able to get to cash flow positivity or raise new capital in this tough environment. And so we believe that, we're going to be able to do some really attractive LBOs as more capital comes to the industry, as hopefully, knock on wood, we get rescheduling and the tax rate normalizes for cannabis, which should also open up some more traditional debt financing. So we see opportunities for consolidation all across the industry.
Yeah, I mean, it makes sense from an overall perspective for consolidation, because you got a lot of small players, most of whom can't borrow. And that makes LBO exceptionally valuable, right? So what are the risks that you anticipate in that?
I think the risks are still just the lack of total capital, right? And that's, both equity and debt, and so even doing a traditional LBO, if you're going to have to pay, 15% plus all in on that debt, you got to be really, really careful not to overlever the businesses going in. And I think that's partly why some of the public cannabis companies have suffered over the last 2 years, is that, they levered up based on EBITDA, but those lenders didn't necessarily factor in that your effective tax rate in cannabis today with Section 280E is 3x what it would be in any other industry.
Right. They left out the whole T. Yeah,
exactly. Exactly. They left out that little T.
Yeah. That's a bummer, isn't it? So I guess the other thing that I wonder about is what is a big part of all underwriting like that is the due diligence.
Yeah.
Right. So what type of due diligence do you use when you look at this? Is this kind of like a say, an owner-operator of a retail corporation, or how does that work? Like, what are we looking at here in terms of comparables?
Yeah, that's a great question. So, the cannabis industry as a whole is pretty broad, and you've seen a lot of non-plant touching businesses, software, business services, biotech evolve in this space because a lot of those traditional providers won't service cannabis yet. So our strategy at Key is, our current fund, we're deploying about 50-50 split between the ancillary businesses and the more traditional plant touching operators. So for those traditional operators, you're absolutely right. It's very much, are you a good nuts and bolts retailer? If they're in cultivation as well, are they focused on their cost basis? Do they know how to grow at high efficiency yields, right? One of the big concerns also for the industry is that while we're in these early phases, a lot of states have limited licenses, which benefit greatly from the cash flows in the early days. But we all know interstate commerce is going to happen at some point.
Right.
So you want to be really careful before getting involved in a business that spent maybe tens of millions building out cultivation facilities in every different state just for those facilities to eventually be redundant.
Oh, and has that happened frequently?
Yeah, absolutely. Every multi-state operator today has had to do that by definition because once you cross state lines,
right.
It's now interstate commerce.
Yeah, no, I understand that, but I didn't realize that so much infrastructure had been built.
Yeah.
Is that anticipating longer run growth? Because here's one of the things I never quite understood about the forecast for this. If you look at it like this, the illicit product is 60% cheaper than the official product, right? Roughly.
Probably depends on the state, but I think that's right. Yeah.
Yeah. So like, square that circle for me.
Yeah. Well, a lot of that is because of the tax issue and then also just the compliance costs associated with the cannabis industry, right? So, it's definitely been a tough headwind for the legal markets getting off the ground. But look, I think everyone wants to buy a legal product, right? They want to know it's tested. They want to know it's safe. There's no fentanyl in it, right?
Right. There's that official part of it. Yeah,
exactly. And you've also got a lot of, non-traditional cannabis consumers who would never buy from a drug dealer.
Right.
So they're coming into the market, but you're absolutely right. I mean, it puts a lot of downward pricing pressure on the legal markets, but we know that that's going to go away eventually. And our thesis to our portfolio companies today is like, if you're surviving today is thriving tomorrow, because we know a lot of those headwinds are going to clear up.
Right. Fascinating.
Yeah.
Well, so Jordan is here at CFA New York today to speak to the membership about some of these topics and others. So if you're a member, by the time this podcast drops, you will be able to log into our website and watch the entire video if you'd like to hear a meatier discussion about this from the perspective of a real estate investor and a couple of other really interesting ways to look at the legalized cannabis products. So market. So thank you, Jordan, for being here.
Thank you, Rob. Really appreciate it.
And thank you to everyone who's been listening to this. Until next time, I'm Rob Rowan, and I will always be your host of Compound Insights.